In my work with med spa and wellness practice owners, I found that most of them are making at least one of three profit mistakes that are quietly killing their margins, and they don't even realize that it's happening. So today I'm going to be sharing those mistakes with you and exactly how to fix them. I'm Chelsea Zania. I'm a CPA, and I specifically help med spa and wellness practice owners build profitable practices. Now, I want you to stick around to the end of this video because mistake number 3 is an easy fix, and I'm going to walk you through a quick exercise so that you can start improving your profit margins right now. But let's start with the basics. So I know at this point you've probably been told that profit and revenue are not the same thing, and profit has turned almost into this marketing buzzword at this point. But it is really important, and I'm going to break it down for you in a way that actually makes sense and is useful to you right now. Okay? So profit is really made up of two components. There's gross profit, and then there is net profit. Net profit is what's left over after all of your expenses are deducted. Gross profit is what's left after the specific expenses that are directly related to delivering your treatments. Okay, so gross profit is actually where I see the most issues when I'm working with a clinician that's in their first couple of years of running their practice. So that's where we're going to spend our time today. So let's go back to these expenses that are directly related to delivering your treatments. These are called direct costs or cost of goods sold, and they're made up of two types of expenses. So the first part is your consumables. This is going to be your pharmaceuticals, your injectables, your supplies, your skincare products, anything physically that you're using to deliver that treatment. And the second part, and this is where most practice owners get tripped up, this is your provider labor, and this is the cost of whoever is actually in that room delivering the service. So for my med spa, HRT, integrative health, my other cash-based wellness practices, 60% gross profit margin is our target here. So we're talking in percentages of revenues. So this is gross profit as a percentage of total sales. That needs to be 60%. More simply, for every dollar that we bring in, we want to hang on to 60% of that, 60 cents of that, to cover our overhead expenses and still leave us a nice profit. 40 cents of that dollar can go towards covering our direct expenses, which include our consumables and our provider labor. This leads us into profit mistake number 1, leaving provider labor out of your direct cost completely when you're pricing your services. And this is a really common mistake for clinicians who are in their first year or two of owning their practice and they're not paying themselves yet. So they look at a treatment and then they subtract what they spent on consumables and think that they're done. But they've only looked at half the cost when they do that. So let's just do an example here. Let's use HRT as an example. Now, I do always recommend that you do a full treatment plan or package situation, but for this example, we're going to keep it really simple and just evaluate one treatment. So let's say you're charging $450 for one treatment and you're doing pellets. Let's say we've got $150 in pharmaceutical costs here and then another $20 in small supplies. So that gives us a total of $170 for consumables. So if you just look at those numbers, you think your cost is about 38% and your profit margin is 62%. And that looks great at first glance, but you totally forgot about labor. So if it takes you 45 minutes to deliver that service, and let's say your time is worth $75 an hour, that's another $56.25 in labor costs. So now your total is just over $226 in costs, and your margin drops to less than 50%, and we've dropped below that 60% target. So same treatment, completely different picture. Now I know right now that you're thinking, well, but that's not true because I don't pay myself yet. But here's the deal. You want to someday, right? You have to charge enough so that you can pay yourself or someone else to provide that service. So I want you to always include your labor costs in that 40% direct cost when you're calculating your prices. Okay, so speaking of not paying yourself yet, before we keep going, if you haven't downloaded the free consistent salary calculator yet, you can go ahead and grab that now. The link is below in the description, along with a link to the video that I did that walks you through exactly how to use it. Now, this is the starting point for understanding what your practice needs to generate in sales in order to pay yourself a consistent salary. Okay, now back to profit mistake number 2, discounting and underpricing your services just to compete. This is one that I see at all levels, but especially with newer practices. Listen, you can compete on price or you can compete on quality, but typically no one coming out of traditional medicine really wants to be the Walmart of healthcare. We've already done that, the pushing people in and out of the room in 10 minutes. But here's the deal that I see constantly in this industry. As more clinicians enter the market, practice owners will drop their prices to compete. And pretty soon it's a race to the bottom and no one is winning. We saw it with injectables, and then we saw it with weight loss, and now we're starting to see it with HRT. Here's the reality of all this. If your pricing doesn't allow you to hit a 60% gross margin after accounting for both your consumable costs and your labor, you are working at a loss on every single treatment, and you just can't make it up in volume. You just end up more exhausted with the same financial problem. So listen, there are around 350 million people in the United States alone. There are plenty of clients to go around. So focus on getting really good at treating your niche and then price accordingly. Okay, so finally, mistake number 3 is not actually taking the time to look at your margins by treatment. Most practice owners think about profitability at the practice level, at this really high level. Am I making money overall? But you really need to break it down because your most popular treatment might actually be your least profitable one. And if you don't know that, you might be promoting the treatment that's doing the most damage to your bottom line. Okay, so every treatment has its own margin. Some are going to be higher and some are going to be lower, but the goal is to know which is which. And then that way you can make intentional decisions about which ones you're going to promote, which ones you're going to increase the price on, and what you might eventually just remove from your menu altogether. So now that you know the 3 mistakes, let's talk about an easy way to start improving your profitability. I want you to look at your top 3 treatments. And for each one, I want you to do this simple exercise. I want you to write down what you charge, and then I want you to write down your actual consumable cost for that treatment. So your pharmaceuticals, your supplies, everything that it takes to deliver it. And then we're going to estimate your provider labor. So if it's you and you're not paying yourself yet, I want you to think about what you would have to pay someone else to deliver that service. So think about how long does it take and what would that time cost at a fair market rate. And if you're still working at a clinic elsewhere, you can use that to help you. Now, how much is left over after you subtract both the cost of the consumable and the labor? Are you at that 60%? If not, I don't want you to panic or get discouraged because this is all information. You don't have to raise your prices overnight. But now you can at least make a plan because every month that you're delivering services below that 60% gross profit margin is a month where you have to generate a lot more in sales in order to get to a point where you'll be able to pay yourself consistently. Knowing this isn't bad news, it's the information that you need to fix it. So if this was helpful, I want you to subscribe to this channel because I'm going to be posting new videos here every week specifically for med spa and wellness practice owners who are working toward building those profitable practices that will support them full time.